Hi everyone, welcome to another weekly Forex forecast for the week ending October 23rd, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the dollar versus the yen, as well as the euro versus the Australian dollar, and we're going to wrap things up with gold or XAUUSD. The markets have been really choppy and indecisive lately, so I'm going to show you what I'm doing in the short term, as well as what I'm looking for in the long term from all of those pairs. So let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. First up, we have the Euro USD, and this pair is really in no man's land at the moment. If you recall, we had this run up back here after breaking free from this consolidation, and this is the last time that I traded the Euro USD when it was breaking out of this descending channel. Now, since we had this run up and then this failure up around the 119.70 area, the pair has just gone sideways. And it looked like we were going to get a little bounce here, and we did from 116.15. However, that bounce has since failed and the pair has started to rotate lower, looking like we want to go back and retest the 116.15 area. Now, this is something I've talked about for a while, where the underside of these lows look to be forming a resistance level that the pair just came off of. All right, so there's a trend line through here, and in my opinion, this is why the pair failed recently. However, if we look at the monthly time frame, we can also see that the Euro USD needed a pullback, and furthermore that the pair is going to remain constructive in my opinion as long as it's above the 114.50 area. So notice back here on the monthly time frame how we had several highs through here. We then had lows through this area and then highs once again, as well as this recent high. So this is something I've been talking about now for weeks, and the pair is also holding above that multi-year trend line. All right, so as long as the pair is above this 114.50 area on a monthly closing basis, I have to stay relatively bullish on the Euro USD. So if you'll notice too, last month we had a bearish engulfing month. So what I think could happen here is we could see an intra-month dip below this trend line, perhaps to tag that 114.50 area, and then that could be followed by that next leg higher. Now that idea could change. We could get a monthly close back below 114.50, but as long as this area through here holds on the monthly chart, I have to stay bullish the euro over the long term. So on the daily, what that could look like is if we do see this lower high play out and we come back to retest 116.15, we might get a close below that area for that final push down into 114.50. Notice back here we had this high. We also had several highs through this area. All right, so 114.50, this region through here, is going to be critical to watch on the way down. So I'm not necessarily interested in shorting the Euro USD right now because we could come down and hit 116.15 and then bounce from there. But I am looking to buy the Euro USD once we get a pullback into that 114.50 area over the coming weeks. The pound is in a similar situation to the euro, where the pair is just kind of chopping sideways now and we don't really have any clear momentum. So you can see where we broke above that 130 area. You can see how it was support back here and then resistance. We broke above that, but then the pair failed to maintain that breakout, and instead we closed the week back below it. So right now, again, just like the euro, we're just kind of moving sideways. There's no real momentum here, and there is a trend line here that could come into play over the coming week. So this trend line could be a factor here recently, and if we do see another retest, it may be worthwhile to keep an eye to see how the pair reacts to this trend line. If we do get a reaction from there and then a break lower, that could offer a short opportunity. Just keep in mind that we have a lot of lows down here above 126.70. All right, so this is 126.70, and you can also see how just above that area, right around 127.50, we also have several lows. So this region through here is going to be critical on the way down, which is why I'm not going to be playing the pound even if it does break this trend line. Furthermore, this is something I pointed out a couple weeks ago, where we have the monthly time frame forming this falling wedge pattern on the monthly chart. This is a 20-year pattern that could trigger a breakout over the long term, So even though we did get a bearish engulfing month last month, this is something to keep an eye on because it could send the pound higher, even much higher, over the coming months. But in the near term, we could see more weakness from the pound, especially if it breaks below that trend line. The dollar yen is next, and this is a wedge pattern or triangle on the monthly time frame that I've been talking about now for a very long time. We have this lower level that broke down back here in July. So you can see how well defined this is. Even though we had this wick drop below that level, the pair never did close below it. However, back here in July it did, and you can see where the 106 to 106.50 area became resistance after that. We also have this upper level that's even more well defined than that bottom one. And just like the bottom one, these upper wicks never did close above this triangle pattern. Now, since we did break below this pattern though, the dollar yen really hasn't moved anywhere. And that's not too surprising considering we have the US elections coming up here in November. And in my opinion, that's why the rest of the market is really just stagnant right now. So if we look at the daily time frame, this is something I pointed out recently where we have this trend line from the year-to-date low that intersects with this one here and also this one. Now you can see where recently the dollar yen sold off right from the underside of that trend line. And we also have this short-term trend line. Now, this is a bit speculative because this trend line doesn't really have a lot to work off of, but the pair did break below it recently, which could give way to further downside over the coming days. However, there are a lot of lows here recently that could be triggering some support. So notice back here, we have several lows through here, and that's exactly where the dollar yen is catching a bid right now. So, like the rest of the market, there's not a lot of momentum here. I do think that as long as these recent highs up here stay intact and we continue to form these lower highs, we could see another rotation down into this 104.20 area. Notice how it was support back here. And if we do finally get a daily and especially weekly close below 104.20, that could open up the 101 area. So if we look at the monthly time frame, you can see where the 101 area was resistance back here. It was then support through here, and then support recently. So this has been my intermediate target here around 101 for the dollar yen. But again, like the rest of the market, we're kind of going sideways. Not a lot of momentum here, even though we did have that breakdown back here in July. Most of the crosses don't have a lot going for them, and even the price action is really choppy. However, the euro versus the Australian dollar does have a nice range that has formed here over the last few months. So I talked about this one on Friday, and I essentially told members that I'm looking to play a breakout here from this 165.70 area. So notice how this has been resistance over the last few months, and it was even support back here before the pair fell below that level. Now, you could look to play this range and try to sell from this resistance area, but the fact that we've been channeling now in this range for several months tells me that the idea the pair is going to continue to just do this for months on end is pretty slim. So I do think we're getting close to a breakout. And furthermore, you can see where we do have a potential higher low recently. So this swing low back here could be a higher low based on this one. Because if you look at this pattern here over the last few months, we've had a retest of support, resistance, support, resistance, support, and then back to resistance. And since that time, we now have failed to come back to support. So of course there's still time for that. We could just do this and then come back to support. But if this is a higher low right here, that could indicate that the pair wants to break this level and use this region as support for a push higher over the coming days. Now, if we do get that daily close above 165.70, the 170 region is going to be the one I'm going to keep an eye on as a target. Notice how it was a key factor back in this area. And furthermore, the distance between 165.70 and 170 is about the same as this current range. And that's a good rule of thumb. Anytime you're trading a range breakout like this, it's a good idea to use a target that's the same distance as the range that the pair was just in. So buyers still have work to do here. We still need to see a daily close above 165.70. If we do see a rotation lower back here toward the 160-100 support level, we could also get a break below that and play a breakout for a move lower. So again, the pair needs more time to develop, but this is one I'm keeping an eye on over the coming days. And last but not least, we have gold, or XAUUSD. It looked like the pair wanted to break out here recently. I had a trend line drawn from this recent high, and it was pretty well defined, but you can see where recently after breaking out, it just became really choppy. So we had this high up here at 2075. We then had this one, and we also had this one right here. You can see where 2 Fridays ago, gold did break out from that level. However, it then closed 2 days later back below it. We then closed back above it. So this level right here that I had placed recently is becoming insignificant. All right, so I'm going to remove that one, and it looks like we have a new one in play here off of some of these recent swing highs, where you can see where XAUUSD actually sold off right from that level. All right, so this could be the one to keep an eye on, and this 1910 horizontal level could be the one to keep an eye on a weekly closing basis. So if we do get a daily close above this trend line, followed by a weekly close above 1910, that could send gold higher back to some of those recent highs around 1970 and of course 2015 and 2075. As for support, there's a confluence of support around 1850 based on these two lows back here. 1850 is also a critical horizontal level for gold. But as I've mentioned recently, even if we do get a break below 1850, it doesn't mean the bullish scenario for gold is out of the picture. Because if I go to the monthly time frame, you can see where back here in 2011 and 2012, how this 1790 level was a critical factor as resistance. That means that if we do see a pullback here into 1790, that the area could attract buyers. So 1790 is going to be the one to watch if gold does break below that 1850 confluence of support. Notice how 1790 was also resistance back here. It then flipped to support. And this price action through here is no doubt based on that 2011 and 2012 price action. So all in all, in the big picture though, gold still looks constructive. The uptrend that's been in place since 2016 is still intact. So this to me looks like a pullback, aka a continuation pattern of this larger uptrend that's been in play for the last few years. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.